Alright, here in this video, let's discuss what is happening with Tesla stock. Tesla has fallen quite a bit over the past 2 days, really got rejected hard around 260 after we hit as high as 265. Some people are starting to speculate that this is actually because Tesla's going to post weaker Q4 delivery numbers, and some whales out there already know what that number is going to be. Is that logical? We'll talk about it here in this video. What the most likely reason is for the decline in Tesla stock over the past 2 days, what that truly is. We will also get into what some experts are saying about our markets, how stocks could take off once we start into 2024. This makes a lot of sense to me. We'll look at that here in this video. Play that clip. It's like 3 minutes long. We'll also play a clip from Ross Gerber that Gary Black shared and said was a pretty logical argument for Tesla stock. As you guys know, Ross Gerber, he's a bit emotional sometimes, a bit of a moron other times, but I do like this interview and his perspective, generally speaking, on Tesla stock in 2024. He mentions how the estimates are very low for Tesla in 2024, that's actually a good thing for Tesla stock investors, that Tesla can beat the estimates and thus Tesla stock likely goes higher. So we will go over all of that here in this video. Now we'll also look at what some experts like Tom Lee are saying about our markets right now. Hit that like button, subscribe to the channel if you guys find value out of this video. Thank you for watching, and let's get into it. Okay, so let's start with what I think is happening with Tesla over the past 2 days. No, I don't think whales have the delivery numbers before we do or for the broader markets do. It's a possibility. It's possible Tesla misses the numbers terribly and the stock gets decimated. I think there's a lot more on the line this time around than other times. This is going to either confirm or deny Tesla's full year guidance. This will either be a new record quarter for Tesla or it will not be. It really comes down to the US, and I've shared my estimates on this. I think Tesla is going to come in between 500 and 520,000 deliveries. I think a comfortable estimate is around 510,000 deliveries. Wall Street currently expects 483,000 deliveries, and Tesla needs about 475,000 deliveries just to meet their 1.8 million full year delivery guidance number. So that's a little bit of perspective on where I think the numbers are actually going to be. Now, what's affecting Tesla stock here today, especially tax loss harvesting? Yeah, I wish there was something a little bit more complicated or concrete than that. But if you are anyone over the past 2 years that has bought Tesla stock higher than $248 per share, where it's currently trading at, you are down in your position. Now, there's been a lot of gains over the past 2 years, especially over the past 9 months with the massive outperformance of big tech. That really started around May-ish. And if you're booking a lot of profits, you're likely to sell some stocks for losses as well. That kind of explains the just straight downward trajectory of our markets today, because this is the last day to tax loss harvest in 2023. And it looks like funds are taking advantage of that. Now, when you tax loss harvest a stock, you have to wait 30 days to buy it. I think there's a lot of people that are actually bullish on Tesla under the surface. We've seen a lot of option activity in Tesla that has been bullish recently. And I think a lot of the tax loss harvesting has already happened for Tesla. I think this drop right here, there was a lot of tax loss harvesting in October as well as, kind of midpoint through November. But today is the absolute last day to do that in 2023. Now, what we've seen recently is a lot of option activity that's very bullish with Tesla stock from hedge funds and institutions. So in theory, you could be seeing a lot of tax loss harvesting on Tesla today and over the past 2 days now, but that could be made up for in some of those close to the money options that we have seen hedge funds and institutions buying. So it's a little tricky when you're looking at options and trying to, make sense of this market, but that's kind of what I think is going on right now. Hedge funds and institutions have bought a lot of bullish options recently, so they're still in Tesla. They're still taking advantage of any upside, price action Tesla will have from now for the next 30 days, but you did see a lot of tax loss harvesting. Now, as this expert thinks, that we're going to play the clip in just a second, he thinks stocks could actually take off in 2024 as people are trying to catch up to the performance of the markets and where the markets are likely going in 2024.
This approach of all-time highs, a chance for investors to cash in, to break even, or confirmation that a young bull market is gathering steam into 2024? Let's ask 314 Research co-founder Warren Pies. Warren, it's great to have you here. How you doing?
I'm good. Thanks for having me.
Sure thing. Now, you know, the story for this year, I mean, you could have said it a year ago, but it was, can inflation go down more quickly than the economy loses steam? And that has certainly happened to this point. We now seem to have kind of seen a Fed pivot rhetorically, if not in reality. Where does that leave you in terms of what we should expect, at least in the first part of next year?
Yeah, I think that we try and be data-driven at 314 Research. And so the data points in a bullish direction. It's hard to kind of deny that at this point in time. You end up with a few just broad axioms that we live by. Don't fight the Fed. Well, the Fed's now stepped aside. And if you remember, we talked earlier this year, and one of our problems with fighting the tape back then was the tape signals aren't as good when the Fed's in your way. And so now the Fed's cleared the path. You can trust the tape more. So we're seeing a broadening rally. We see, even though there's a lot of bullishness in the market, it feels that way when I look at it objectively by the data. Economists are still kind of on the fence on a recession next year, and strategists are far from bullish. I mean, at this point in time, the average strategist target for 2024 year end is implying less than 1% gain on the S&P 500. So I think this kind of sets up for this big bullish chase. We upgraded equities in November with the idea that everyone's going to be behind the eight ball and need to catch up. And I think that's what's happening right now.
Yeah, it does seem as if a lot of those things you mentioned, plus just the run of macro data and what's happened to bond yields, has really turned the burden of proof back over to people who think the economy is in some serious trouble in the near term. How do you think the market, though, trades with respect to what the Fed might do, just exactly how the numbers have to come in, the data have to come in order to get the Fed continuing to, I guess, be more of a tailwind than a headwind?
Well, I think we have to go back and study history a little bit. And unfortunately, soft landings that's our base case, but they're relatively rare. But the one takeaway that I see when I study history of soft landings is that the market rallies aggressively in anticipation of the first Fed rate cut. And that's a little different than hard landing cases. And so the average case sees a 10% return in the market in the 6 months leading into the first Fed cut. And so I actually think that's going to hold this time around. I think that points to a kind of crazy sounding target that we put out there a little while ago of 5,200 by May 1st Fed meeting. That's when we expect the first cut. So sounds crazy, but I think that keeps the pressure on these strategists who have yet to increase their targets. And we have this kind of perfect bullish storm here in the first part of the year. The other thing I would say, I think every strategist is looking to last year after getting burned on their recession predictions, and they want to get back to normal. And normal is like 8% return, and they go through and check all their boxes, and they think presidential election cycle says weak first half, strong second half. I think you could flip that entire script on its head where we have a strong first half and then a weak second half next year as everyone has to catch up and is behind the eight ball.
I mean, it's pretty simple. As long as we avoid a recession in 2024, stocks should do very well. As I previously mentioned here on this channel, 65% of large cap fund managers underperform the S&P 500. About 75% of these same fund managers underperformed the S&P in 2022. You cannot afford to do that in 2024. As long as it looks like we're not going into recession, which is what it looks like right now as per the economic data, and we're expecting 6 or 7 rate cuts in 2024, you have to be allocated to stocks. Now, as far as what stocks and where to put your money, Goldman Sachs did a survey, and they surveyed institutional investors. These would be hedge funds, money managers, and they asked them where the most attractive opportunity was to trade and to put their money in the beginning of 2024, in probably the first half of 2024. It says early 2024, that probably means the first half. 30% said rate cuts. So stocks that will benefit from rates going lower. Get this, mega cap, tech, and AI, only 7% of institutional investors saw that as a trend worth buying and hoping for a continuation for in 2024. That is very interesting because I would have expected this personally to be a lot higher than 7%. No. Hedge funds and institutions, they want to chase stocks that will benefit from rates going lower. I cannot think of a single stock that will benefit more from rates going lower than Tesla. And that's why I think Tesla could have a strong January, February, and March as long as the economy continues to, look like it's avoiding a recession. And Tesla beats on Q4 delivery numbers as I expect. I mean, the first quarter or two of 2024 could be pretty bullish for Tesla and for small and mid-cap stocks. Tom Lee with Fundstrat says he thinks too many people are just looking at the entire PE multiple of the S&P 500. When you actually strip out FANG, which is like Magnificent Seven without, Tesla grouped in there, the PE on the S&P is only 15.3 times, and he thinks that's a good entry point. He also thinks small caps, well, they're still Fundstrat's top call for 2024. Fundstrat's Tom Lee was the only one that was basically correct on where the markets would go in 2023. So he's vouching for small caps, and I think the bottom line to that is because small caps are interest rate sensitive names, right? Tesla falls in that category as well, so Tesla should also do very well in 2024. And now the S&P 500 is likely to be up 9 straight weeks in a row. The last time this happened in 86, you were up 14%. In 1990, you were down 4.5% the next year. In 95, you were up 34%. And in 05, you were up 3%. So historically, when there's this many weeks in a row that are green, the next 12 months tend to be pretty green as well. China's central bank continues to inject a record 1.257 trillion won in open market operations this week. So if China does start to recover, because probably all of the stimulus they're seeing or starting to see, that could also be a tailwind for our markets and especially multinational companies, which is Tesla specifically.
Well, first off, shout out to George. I read his Tesla and his work. He's a great analyst and a great person to follow if you're looking for Tesla data. And I think his point about earnings being the driver of stock prices is ultimately what's going to determine Tesla's success next year. So the fact that Elon has, become, and I don't think it's equally a similar controversy of smoking weed on Joe Rogan to making severely anti-Semitic remarks. These are different levels of, or telling everybody to F off, So I think if Musk's behavior continues to get more and more extreme, that is a risk to Tesla sales. But the bottom line, as George pointed out, it's the best vehicle on the road. It's the best value on the road. So consumers literally have to buy a lesser car because they don't like Elon. And so I don't know if consumers are going to do that or not. I know certain consumers are for sure, but there might be many others that just simply want the best car.
Yeah, balancing whether you want to continue to buy from a figure that perhaps goes increasingly divisive versus just saying, all right, I'm able to just kind of take the juice and ultimately just keep moving and be comfortable with my car purchase, at least at this point in time.
Well, Tesla is Tesla and Elon is Elon. And I think the best thing Tesla can do is continue to differentiate its brand, as Tesla. And
haven't
that's
they
why
intertwined so much of that brand with Elon, though?
Well, it's hard. It's really hard because Elon is basically the face of the brand and the voice of the brand. And they've been, if you notice on Twitter, Tesla's been tweeting more as Tesla. They've been defending themselves more. We've seen more attempts at advertising. And I think if Tesla goes full in on advertising and continues, to sort of build its brand, Elon's effect will be less and less damaging to Tesla overall. But the bottom line is you can't diminish the effect of the damage that he's caused.
Ross, let's talk some numbers here because we were showing in a prior segment how the earnings estimates for next year for Tesla have continued to fall really throughout the year, but most notably, at least according to Yahoo Finance data, over the past 90 days. Can this stock continue to work higher next year if earnings estimates continue to come down and Tesla does have some product miscues?
Well, I don't know about product miscues. I mean, they're going to struggle to put Cybertrucks out next year, but that's expected. In my mind, it's a launch year and it's an incredible new technology and product. That said, I like that they've lowered expectations this much because it gives Tesla opportunity to beat. So if they can actually increase margins by lowering costs and or not have to lower prices because demand picks up, maybe we get lower interest rates and maybe Tesla beats earnings over the course of the year. And I think that's what a lot of the analysts who have price targets at 300 or 350 are thinking, that Tesla might earn closer to $5 than, let's say, the less than $4 that's expected. And if that's the case, a $300 price target does look reasonable for Tesla. But right now, $4 is, where I'm at. And, so Tesla's a fully valued stock, but, we're long-term investors. So, we're very bullish on Tesla's long-term. And it is an AI company. It's absurd to not, give it credit for where it is.
An AI company at the multiple of NVIDIA, at the multiple of, what's the comparison?
Well, NVIDIA is a hardware company, so they're in a particularly good spot right now because everybody needs what NVIDIA makes, and there is no, AI without NVIDIA at this moment. Where Tesla has the first application that's pure AI that actually helps society. So large language models are wonderful, and they're just at the beginning stages of its potential. But Tesla Full Self-Driving has been going on for years, and it's pretty close to driving. So we've got a real world AI driving car. I don't know what else you want. I mean, it sees in real time what's happening on the road and makes adjustments and drives for you. So it's not perfect yet, but it's improved dramatically over the last year. And once again, I think it will get solved. It's just how much time. We're at a point where the technology has gotten so far that the incremental increases in ability are harder and harder, but yet nobody wants any accidents in a Tesla, full self-driving. So that expectation is extremely hard to meet.
Seth Golden says on X, it's different this time. Soft landing is the most probable outcome. There, I've ripped the Band-Aid off for you. Disinflation cycle is fastest and deepest from 9% peak in the modern era. And here you can see, I mean, that's exactly it. You spiked and you've come right back down pretty fast. This is more fuel on the fire to say we may actually avoid a recession after all. Tom Lee says, just an observation and not a forecast and not financial advice. I have not spoken to a single institutional investor that wants to be short equities at the start of 2024. And these same funds are still trying to right size after being very short in October. Suggest to me stocks have a steady bid into the end of the week? Maybe. I mean, I think that's showing itself now. Stocks largely are falling today. And I think that's a lot of tax loss harvesting. But I think this does remain true for the start of 2024. You don't want to be short at the start of 2024. A lot of hedge funds and institutions need to catch up. And there's a lot of money in money market funds on the sidelines that is not participating. So I think there's going to be a constant bid on our markets, a steady bid on our markets for at least the first half of 2024. Now, as you guys know, I think Tesla stock could hit in between $450 and as high as $600 per share by the end of 2024. That's why I continue to buy Tesla stock on a week-by-week basis. If you guys would like to come see all of my trades that I send out every time I make them, check out the link down below in the description of this video. Let me know what your end of the year price targets are for Tesla stock as well. Thank you for watching. Enjoy the rest of your day. My name is Michael Tyler, and I will see you in the next one.